Existing home sales. That's our topic for today's Backstage Pass. Existing home sales data was released today. This data is released by the National Association of Realtors, and it shows information, and the report contains data on homes that closed. And this is homes that closed during the month of June. And we've been looking forward to this report because this report really encapsulates or incorporates shoppers that were shopping for a house during the month of April and May. And that really incorporates all of the rise in interest rates. It was a little bit more of a lift in June, but it came back down. So this really incorporates a majority of the lift in the interest rates. And so we've been looking forward to seeing what this data has in store. So let's take a look at it. Data showed that sales were down 5.4% in June, which was worse than expectations. It was actually forecasted to be a 3.4% decline. And on a year-over-year basis, sales were down 14%. Now, inventory did increase almost 10% from May to June. That's 1.16 million to about 1.26 million. And it's now up 2.4% on a year-over-year basis. But this was expected, as this is part of the natural seasonal increase we see in inventory, which typically peaks late summer and then begins to decline. And that inventory increase is normally centered around families that want their children to start school at their new house in the new school year. And so that's typically why we see this seasonal increase. Now there's a 3-month supply of homes on the market that's up from 2.6 months. And 6 months is actually considered balanced when we're talking about the imbalance of supply and demand right now. Homes were only on the market for 14 days in June, which is down from 16, and it's the fewest days on market since tracking began in 2011. 88% of homes that were sold were on the market for less than 1 month, and this should continue to be supportive of home prices. Homes that are priced right are selling very, very quickly. Now, the median home price in this data was about $416,000. This is up 13% on a year-over-year basis, but we always want to remind you that this information, this data is a little bit skewed because the number of homes that are selling below $500,000, that percentage is down very, very sharply, and the number of homes selling above $500,000, well, that percentage is up, and so that's skewing that median home price just a little bit. First-time home buyers accounted for 30% of the buyers in the month of June, which is up from 27% in the month of May. That's great news, and it's really about the same as the report was last year. So June's report last year was 31% of first-time home buyers. June's report this year is 30%. So first-time home buyers are staying very, very resilient. They're hanging in there, and they are continuing to be a major part of the market, which is good news. Cash buyers remained at 25% from the previous month's report, and investors remained at about 16%. Another piece of great news, only 1%, actually less than 1%, of all the homes sold were in foreclosure or were in the short sale status. That's great news, and we've talked a lot about loan health in the country right now and how home loans are healthy, supported by home values and appreciation. But that's just great news because there was a lot of talk a year ago and 2 years ago when people were going into forbearance that there would be a huge glut of foreclosures and short sales that would come onto the market. And really that would be bad for the market because it would eventually lower prices, and that hasn't happened yet. So good news about loan health in the country. Now moving on to the bond market. Mortgage bonds are dancing on the 25-day moving average still. They're sitting right there on that floor of support. They're down about 19 basis points at the time of recording, which is a little later than in the day than normal. The 10-year yield is up about 2 basis points, and mortgage rates, the bonds opened higher today. So mortgage rates opened up a little bit better, but throughout the day, bonds moved into negative territory, and we saw almost all of the lenders reprice for the worse on the negative movement on the mortgage bond. Some of that's being driven by a weak 20-year bond auction, or U.S. Treasury auction that didn't come in as expected, but there's also some news out of the European Central Bank, or expected news. There's an announcement tomorrow from them. And some of the European markets are driving the U.S. markets just a little bit. Now that's all the news that we have for today. Hope you've had a great Wednesday so far and a great rest of the week. Remember, stay positive, and we will see you tomorrow.